This Week in Crypto is a study in contrasts, revealing a market that appears calm on the surface but is teeming with activity beneath. While price charts may not show dramatic swings, the industry is experiencing pivotal changes that could shape the future of digital assets for months or even years to come. Price volatility remains low, with major cryptocurrencies like Bitcoin and Ethereum trading within narrow bands. This stability is unusual for a sector known for its wild price swings, and it has left traders and investors watching closely for the next big move. But while prices are steady, the regulatory and institutional landscape is shifting rapidly. Governments and financial authorities are rolling out new frameworks, and companies are racing to adapt to evolving rules. Bitcoin's price action is calm, yet regulatory changes are stirring the market. Behind the scenes, discussions about compliance, security, and investor protection are intensifying, signaling a maturing industry. The SEC's streamlined approval for crypto ETFs marks a significant regulatory maturation. This move is seen as a green light for more mainstream financial products tied to digital assets, and it's expected to attract a new wave of institutional investors. This opens doors for innovative investment products, bridging the gap between crypto and traditional finance. As a result, we're seeing more collaboration between established financial institutions and crypto-native firms, creating new opportunities for both sides. In the world of decentralized finance, or DeFi, exchanges are innovating fiercely. They're building robust ecosystems with native stablecoins, aiming to provide users with more stability and utility. These developments are making DeFi platforms more attractive to both retail and institutional participants. Bitcoin continues to trade in a tight range, but Ethereum is showing signs of strength, buoyed by growing institutional inflows and renewed interest in its technology. This divergence is prompting analysts to reconsider the dynamics between the two leading cryptocurrencies. Meanwhile, altcoins like XRP and Solana are navigating technical upgrades and attracting investor interest. Their development teams are pushing forward with new features and partnerships, hoping to carve out a larger share of the market. As the landscape evolves, investors are now evaluating assets based on real-world use cases and technological roadmaps, rather than just price speculation. This shift signals a more mature and thoughtful approach to crypto investing, setting the stage for the next phase of growth in the industry. Bitcoin currently finds itself in a state of quiet tension, a calm before what many believe could be a significant storm. The market is holding its breath, with traders and investors alike sensing that something big is on the horizon. This period of stillness is often deceptive, as it tends to precede major price movements that can catch even seasoned market participants off guard. At the moment, Bitcoin is trading around $111,138, exhibiting remarkably low volatility. The price action has been unusually flat, with the digital asset moving within a narrow range for several days. This lack of movement is notable, especially for an asset known for its dramatic swings, and it has left many wondering when and how the next big move will unfold. Technical indicators, particularly the Bollinger Bands, are signaling that a significant price move could be imminent. When these bands contract, it often means that volatility is at a low point, but history shows that such periods are usually followed by explosive price action. Traders are watching these signals closely, preparing for a potential breakout in either direction. Adding to the tension is the looming expiry of $17.5 billion in Bitcoin options contracts. This massive event has the power to influence short-term price dynamics, as traders adjust their positions and hedge their bets. The options market often acts as a catalyst, amplifying volatility and driving sharp moves as expiry approaches. Many analysts believe the market may gravitate towards the so-called max pain price of $107,000 before any significant rebound occurs. The max pain point is where the greatest number of options expire worthless, causing the most financial discomfort to option holders. This dynamic can create a gravitational pull on the price, shaping short-term market behavior. Looking beyond the immediate volatility, Bitcoin's long-term narrative continues to strengthen, especially among institutional investors. There is growing speculation that by 2030, central banks could begin holding Bitcoin as a reserve asset, fundamentally altering its role in the global financial system. This shift would mark a new era for Bitcoin, elevating it from a speculative asset to a recognized store of value on the world stage. If this transformation occurs, it could redefine how Bitcoin is perceived and utilized within the global economy. The integration of Bitcoin into central bank reserves would signal a major endorsement of its legitimacy and utility, potentially driving further adoption and investment from both public and private sectors. Real-world actions are already reflecting this strategic shift. For example, Strive's acquisition of Semler Scientific demonstrates how corporations are increasingly viewing Bitcoin as a valuable asset for their balance sheets. Such moves highlight the growing recognition of Bitcoin's potential to serve as a hedge against inflation and a tool for long-term value preservation. These strategic acquisitions and investments help create a demand floor for Bitcoin, supporting its price and reinforcing its status as a long-term store of value. As more companies and institutions adopt similar strategies, the foundation for Bitcoin's future growth becomes even stronger. All of these factors contribute to the current coiled state of the market, where tension is building and a major move seems inevitable. The market feels like a tightly wound spring, ready to release its energy in a dramatic fashion. As the world watches, analysts and traders are monitoring every signal, waiting to see which direction Bitcoin will break. The next chapter in Bitcoin's story could be just moments away, and its outcome may shape the future of the entire cryptocurrency market. Ethereum is on an impressive trajectory, driven by institutional adoption and strong fundamentals. Trading at $4,163, Ether is gaining strength relative to Bitcoin. Institutional inflows into Ethereum products highlight a strategic shift. Ethereum is seen as the foundational layer for Web3, attracting significant investment. The network's health is robust, with record transactions and lower fees. Upcoming upgrades promise to enhance scalability and efficiency. Despite some stakers taking profits, the staked Ether supply remains stable. Ethereum's committed base of long-term holders secures its future. The SEC's new approach to crypto ETFs marks a transformative moment in financial regulation, signaling a willingness to adapt to the rapidly evolving digital asset landscape. By streamlining and shortening approval timelines, the SEC is not only responding to industry demand but also paving the way for a new era of investment opportunities. This shift reflects a broader recognition that digital assets are here to stay, and that regulatory frameworks must evolve to keep pace with innovation. The result is a dramatic opening of the floodgates for new ETF products, making it easier than ever for both institutional and retail investors to gain exposure to a diverse range of cryptocurrencies. This democratization of access means that digital assets are no longer reserved for tech-savvy traders or high-net-worth individuals. Now, anyone with a brokerage account can participate in this emerging market. Grayscale, a major player in the crypto investment space, was quick to seize the opportunity, launching a multi-coin ETF that immediately attracted significant attention. This rapid response highlights the pent-up demand among investors who have been waiting for regulated, easy-to-access crypto investment vehicles. As more fund providers enter the market, competition is expected to intensify. This will likely drive down management fees, encourage the development of innovative product structures, and ultimately benefit investors by offering more choices and better value. On a global scale, regulatory frameworks are maturing as well. Both Europe and the United States are making significant strides in advancing consumer protections and establishing clearer guidelines for digital asset markets. These efforts are crucial for fostering investor confidence and ensuring the long-term stability of the industry. International collaboration is also on the rise, with regulators from different countries working together to create a more unified set of standards for crypto platforms. This push for harmonization aims to reduce regulatory fragmentation and make cross-border transactions safer and more efficient. As these regulatory efforts take hold, trust and stability in the digital asset ecosystem are growing. Investors are becoming more confident, and the market is beginning to mature, setting the stage for sustainable growth. The ETF revolution represents a pivotal moment in the journey toward mainstream crypto acceptance. It signals that digital assets are moving from the fringes of finance into the heart of global markets. With these regulatory shifts and the rapid adoption of crypto ETFs, the market is now poised for unprecedented expansion and deeper integration into the world's financial systems. DeFi remains the heart of crypto innovation, with fierce competition in perpetual futures. Aster's surge on the BNB chain challenges established leaders like Hyperliquid. Hyperliquid responds with a native stablecoin to enhance its ecosystem. This competition drives innovation, lowers fees, and improves user experiences. DeFi's dynamic nature fosters rapid evolution and new financial models. Platforms are building self-sufficient ecosystems to retain users. The DeFi space continues to push the boundaries of financial innovation. Traditional finance adopts crypto slowly, while DeFi builds the future. Solana, trading at $213.40, faces challenges but is rolling out a major upgrade, Alpenglow. This upgrade aims to improve network speed, resilience, and introduce a fee-burning model. XRP shows strength, with potential for an ETF boosting investor interest. Centralized exchange tokens like OKB and CRO are gaining based on ecosystem growth. Strategic deals and new networks drive demand for these tokens. Investors are evaluating tokens based on platform growth and execution. Solana's upgrades aim to attract institutional confidence and sophisticated applications. The altcoin market is diverse, with each asset navigating its unique path. The crypto market is a strategic chessboard for financial giants. Tether's $20 billion funding round could value it at $500 billion, diversifying into new sectors. This move positions Tether as a diversified technology conglomerate. VanEck's crypto ETFs facilitate institutional and retail adoption. These products offer direct exposure to Bitcoin and Ethereum, easing technical hurdles. VanEck's digital transformation ETF invests in industry backbone companies. This strategy offers a different risk-reward profile, betting on ecosystem growth. Strategic products are essential for a resilient and multifaceted market. Market sentiment is cautious, with the Crypto Fear and Greed Index in the fear category. Negative funding rates indicate bearish bets, expecting short-term price dips. Bitcoin's dominance remains strong, reinforcing its status as a safe haven asset. Fear is a reaction to price stagnation and options expiry uncertainty. Long-term bullish catalysts like new ETFs remain on the horizon. Experienced investors see fear as a buying opportunity. Balancing short-term sentiment with long-term trends is key. The market's emotional state is fickle, but structural trends are shaping the industry. Bitcoin's role in investment strategy is evolving, offering high returns with high volatility. Its performance during market stress shows it behaves like a high-beta risk asset. Bitcoin's correlation with equities is rising, integrating into the traditional financial system. Despite this, it still offers diversification benefits with low correlation to gold and bonds. Bitcoin is a unique component, not a replacement for traditional assets. Its high-risk, high-return profile makes it a powerful addition to a diversified portfolio. Investors must monitor its behavior, but its fundamental properties remain unchanged. A small allocation to Bitcoin offers exposure to asymmetric upside potential.